Like just about everything else in the world, the rent is high.
You said it, the rent is too damn high.
I'm Philip Sirius. This is my brother Andrew Sirius. We've been investing in real estate for about 12 years now, and we have over 600 rental units. And there's been a very big shift in the market in the last 18, 24 months or so that has a big impact.
In general, having very low rents is a problem that property managers and real estate investors have, from time to time on certain properties that are substantially below market. This market with rents going up so fast, even faster than basically everything else but real estate prices, while we're dealing with a lot of inflation everywhere, it creates a very difficult situation. Technically good for real estate investors, sort of, but it creates a lot of stress. It's not a good thing for the economy or the world at all. But it is a good time to talk about what to do with regards to very low rents. Generally speaking, there are three ways that comes about, and it's not what we're dealing with now. But the three ways: one is inheriting residence on properties that you purchase.
Yes.
The second one is actually an issue that we've had, is going month to month, and usually we charge a premium, kind of between $100 and $250 a month. But sometimes somebody goes month to month and they think they're only going to be there for about 6 months, but it ends up lasting years and years, and what started as a premium becomes a discount if you don't keep track of those. And so this is something very simply just to take care of. Like if you have somebody on a month-to-month lease, you want to make sure that every year you are basically treating them as if they were on an annual lease, giving them a rent increase or whatever.
Behind.
The last one is just, especially with mom and pop investors, is either no rent increases. Oh, you want to just keep the place occupied. You're afraid of them moving out, or extremely small ones. And so those are what you're normally dealing with. That's normally how you get it. We get a lot from inherited residents, a couple from the month-to-month issue.
But now what's been going on is something just about everybody in every real estate market has to deal with. I think Andrew and I wish it wasn't happening, but it is. The rental market is going up faster than just about anybody can keep up with in terms of the rental prices. So you're kind of forced to deal with this in one way or another.
They went up 16.7% last year to date. Which is higher than inflation, and inflation is way higher than normal.
Now, the weird thing about that statistic, though, is that's what market rent has gone up. Now, actual rent paid has gone up, what was it,
4.8%.
Yes. And
so the difference
there's a reason for that,
New listings are up almost 17%. So every time a property, somebody moves out and then they relist it, it's 17% higher approximately. All inventory this year compared to last year. But just based on Bureau of Labor Statistic data and
how much people are
actually paying more, it's only about 4.8%. So that means that the average rent increase, despite what you hear in all of these horror stories and various news outlets about people getting $1,000 rent increases or whatnot, which is happening some, but in general, it's not keeping up with the market.
No, there's this big difference between people who are staying in units and people who are renting new units, which gives you kind of two choices as a real estate investor. You can either keep rental rates low, and then people will probably not move because they're the options out there are so much more expensive, or you can try to raise rents a lot on your current residence. And then there's some issues you really need to deal with that, and some kind of things you need to contend with.
One of the problems is with tenant psychology, although it should probably just be called psychology. I mean, it's true of everyone. People like stability. They don't like big changes. If you have, and we've had people who have very, very low rent, and they get a rent increase, and even though it's nowhere close to market, they're still very angry. And it's not because they're still paying below market, so they should be happy, but it's just the change is the problem. Buildium did a survey of about just under 1,200 residents, and they found that basically just under half, thought that they should get a rent increase of 1 to 5% every 1 to 3 years. And something close to 20% thought it should be never.
And it's not really practical for very many landlords to never raise rent. Your property taxes are going to go up significantly with real estate prices going up. Inflation is going to cause construction materials, maintenance, labor to go up. Your expenses are going to go up, so your return is actually going down.
I don't think the average person's really thinking this through. You could say the same thing for property owners with property taxes or with mortgage rates. And people are complaining about paying 5% interest rates now, when back in the 80s it was 11%. So it's like everything is relative.
But just that
that's the
sticker
issue.
shock of seeing a $200 increase when they're used to seeing $20 increases is going to make people angry, and they're going to move even if they have to move into a worse property for more money because they're just angry about the situation, which makes sense.
Out of spite. We have had people say that they are leaving their property, they're coming to one of ours.
Because of big increases, yet they're still paying more at our new market rental property.
Yeah, and so you have to keep that in mind in a market that is not normal like this. When was the last time we had a normal market? But since at least 2019, the market has been very weird, very volatile, and in particular just kind of skyrocketing. I guess not volatile; it's just a rocket ship. I mean, it will settle in for sure. But because of that, you have to take into factor these issues with tenant psychology. Of that big sticker shock is going to get you more move-outs, even though you're just going to market. People do not think we are not, purely economic.
Well, and also one thing you do need to keep in mind, I'll get into this a little bit more later, but you're not raising the rent on a market property. Your property has been lived in for a while. It's not freshly furnished or anything like that. It's not going to be as nice. I've seen a lot of the market properties, a lot nicer, newer appliances, better countertops.
LVP,
they're more updated
flooring,
and stuff like that in general. So is your property really competing with those market prices, or are those market prices actually higher? And so you should really be aiming for 85% of what those new properties
you have to remember, and this is almost always true of properties that are low rented. They have deferred maintenance. They need TLC. You have inherited residents. They've usually been there for a very long time, or at least some time, and then they've been with you, even month to month. People who their rents have fallen behind, it's because they've been there for a while. And so they've been lived in. And a lot of times when you send out the rent increase, you're going to get a bunch of maintenance orders because they're like, well, I was trying to stay off your radar. Now I'm on it. You better go fix all these things. So you do need to take into account that there's going to be more than just a standard turnover on these. Almost always. There's going to be
if you're trying to get up to that market
some rehab level. Yes. There's basically three things that you need to keep in mind.
Because everybody has to deal with this on some level.
There's no right answer here.
Yeah.
There's wrong answers, but there's no exactly right way. A lot of it depends on your situation.
Everybody has different goals too, so it kind of depends on all sorts of things.
But the three main considerations, the first one is just an ethical consideration. A lot of people feel really guilty about raising rent a large amount. They have no problem raising it $10, $15, $20, $30, but they, if you're going $200, $300, $500, whatever, then all of a sudden they feel like this is an unethical thing to do, even if the person is getting an extremely good deal right now. And so this is the way I would approach this is just specifically, there is nothing unethical or immoral about charging the market rate. That you're not ripping somebody off. You're not doing. You're charging what the property is. Now again, if the property is lived in and deferred maintenance and needs some work, and its market rent is $1,000, fixed up perfectly, going to $1,000 is above market. Yeah. I would say
and a lot of people think of it as that's what market is, and it really isn't.
It's in that they're at $500, maybe it's $750 or something like that. I do think there are some considerations to make here. The first one is if somebody has been paying at a very low rate, I think you should give them more notice.
Yeah. One thing you could do that could be, I think, very unethical is all you have to do is give a 30-day notice to somebody, and you give them on the last possible day, and you put them in a real bind of not really having the time to figure out their situation. Of all of a sudden they're out in 30 days without really even being able to figure out what to do with their life. I think that would be a very unreasonable way to
I don't think it's if it's a situation they need to move. I don't think offering to pay their moving expenses is certainly a good thing that you could do if that helps you. And also, go ahead.
Well, I was just saying, I think all these things are good, or keeping it below market rate, because you don't want to put a family in a bad situation. You can do these things, but don't consider them business. Consider this an act of charity, and also an act of charity you're not going to get any credit for.
No, they don't give you credit for selling something or renting something under market.
Yeah, but if that's what you feel like you should do, that's okay.
If you believe if you're in a comfortable situation, you're not looking to scale your business or anything like that, and you can give a discount, that's perfectly fine. Just understand that's what you're doing. You're giving a discount. You're doing an act of charity. Don't be scared to do it because you're afraid of how it will be. Yeah. See it as for what it is. And I mean, if you are doing it, I would certainly give more notice. The second one is legal. Yeah. There are some issues in certain states. There's a lot of stuff that's been going on. This is one of those, disclaimer, talk to an attorney. But for example, in Oregon, if you raise the rent over 7% above inflation, so approximately 15 or 16% right now, in those cases, you would need to pay the moving expenses of the person who was living there. There are other restrictions. The amount of notice you need to give in some places is extremely difficult, particularly in the coastal areas. So if you are going to be doing very large rent increases, even from extremely low baseline, this is something to talk to an attorney about, especially, I mean, for anyone, but especially if you live in one of those coastal
Well, and the other thing to keep in consideration is if you have your rents low and you plan to keep them low to keep move-outs low or whatever reason, I think these laws are only going to become more and more strict over the next 5, 10, however many years. And if you have a really low rate and then one of these laws come in, you're going to be stuck with one of those low rates or be in an awkward situation where you can't really get to market or you spend a lot of money to get to market or things like that. So be aware that if these laws start coming in, which they probably will whenever there's this big kind of shock to the system, there's a lot of angry people. I think legitimately angry people at what's going on. And people are going to want change and they're going to want these protections, whether they're well thought out ones, that doesn't really matter. We don't really get to say that, but they're going to come. And so you have to realize, I don't want to get stuck being at 40% of market and then one of these rent control
I mean,
laws
if you
comes in.
and then if you get to a situation where you want to sell a property, selling a property that's under rented, there are a lot of investors don't even want that, or they're going to they want a major discount. So you are kneecapping the amount you can actually charge for a property in such a situation as such.
Your value of a property with low rents is going to be a lot less, and we see a lot of people. I think every market property that comes on the market in the next 10 years is going to say low rents can be raised because those are the prices that are going to be sold.
And then, of course, the most important part of this analysis is the financial, or at least the most analytical one. I did an analysis, just a very simple one for a Bigger Pockets article linked in the description, comparing two potential owners, one who keeps the rent just 1% increase a year. So it's not doing any, this is not the person who does no increases. And one who does 5%. The person who does 1% has 0 move-outs. Lucky. And the person who has 5% has a move-out every 3 years, which is about on average. RealPage did an analysis showing that about 57% of tenants renew that lease and their lease each year, and it's trending upwards, and it will probably continue to trend upwards since market rates are going up 16.7%, or at least they were.
They did.
And the amount people are paying is going up 4.8%. So one's doing 5% increases, one's doing 1% increases. 5% increase, move out every 3 months or every 3 years. 3-month vacancy, $1,000 extra turnover expense above. And what you find is the person who's doing 5% rental increases makes over 10% more, $15,000 more over the course of 10 years than the person who's not increasing them at all. So it might feel better to have, it's one of those things, is it might, tenant psychology, owner psychology, it feels better to always have it rented, but if it's rented low, it's not actually doing
and you're creating
better
a bigger and bigger problem over time as well. So you got to keep that in consideration. The value of your property becomes less over time because you can't sell an asset that's rented 40% of the market for the same. You can rent something at 90% of market.
So generally, you want to always raise your rents, and you want to keep up, if not at market, very close to market. I think you start to get into trouble when you get to over 5%.
Yeah.
I mean, Brian Davis comes and says you shouldn't raise rents over 5%. That's his advice. That RealPage, or I'm talking about the Buildium survey said that's kind of the maximum. So if rents are going up 2 or 3%, you should keep pace. If they go up 5%, you should keep pace. Maybe 4%. But
I do think percent is kind of a little bit the wrong way to think about it. I think 5% of $500 just feels way different than 5% of $2,300. The numbers are so different that I think it really makes a difference. But also, I mean, there's a lot of strategy you can use with if you're going to raise your rent. Are you just going to do it all in one go, or are you going to raise to market right away? I mean, we've kind of thought about this a lot and how we want to do it, and we've decided we're going to keep move-outs really low, so we're going to keep rents at reasonably competitive prices, but we can't fall too far behind. So we're going to do really deep analysis of what market value is, put our market value lower than that because we know these houses aren't quite as updated as what's brand new on the market, and then be aggressive in getting to that price, but not try to get there in 1 year.
Yeah, I think you have to look at a couple of factors. One, this 16-17% increase is not going to continue. No. We've already seen prices in real estate start to flatline.
Inflation's
it's going to happen with rents too. It's impossible. Like, it's literally unaffordable for people.
Yes.
So you could catch up over the course of a couple of years and also avoid that sticker shock issue.
Yeah.
So I think when you have these extreme increases, you need to look at that. With the other thing you need to look at is how hurtful is a turnover to you at the time.
That's true too.
We've had situations where we have extremely high occupancy and we're going to push our push our rents
because we're comfortable with more move outs and stuff like that.
We took on quite a few properties this year. We have a little bit more vacancy than we prefer, so we don't want to push that. And it's kind of it's a good reprieve, because if we just raise rents a little bit, we're gonna have very few move outs because the market
we've taken on so many new projects.
And so
all of a sudden.
that's a big advantage there. If you have a lot of vacancy, this is a good time to be very, not, I won't say passive, but like just small little
get your
increases.
vacancy up really easily.
I do think
a free gift in that sense.
I do think generally you want to be increasing your rents, even if it's just a tiny amount every year. Just don't. People want consistency. They should know what's coming.
I would say if you move people in, tell them when they move in, their rent will go up in a year. Yes. People are much more angry when they assume their rent's going to stay the same year to year. Tell them when they like you, when they still want the property and they haven't moved in yet, that in a year, expect to renew your lease and expect it to go up. Don't tell them how much, because you don't know how much it's going to go up. But tell them there probably will be an increase, and just expect that, and it will help the process.
Setting expectations is extremely important, and keeping them. So even if you think, like, I would just keep this property at the exact same level, I would go for like a $5 increase. I mean, we even just changing it. Like, if you really don't want them to move out, maybe give them a $5 decrease. Yeah. I mean, like, we've done that a couple times.
I wouldn't do that in this market.
Not in this market. Not in this market.
We have done that in the past.
When things come in the bit. We've done that in the past. But this market, if you have a high amount of vacancy, or you're doing a ton of turnovers and rehabs and your crews are stretched, this is a good time to not be particularly assertive. You should have time to catch up. Just make sure that you have this plan. You are thinking this through. You do want to get to market. You don't want to fall behind just because your properties won't become vacant, but maybe not this.
And that's what we're doing. We're taking the situation very seriously, putting a lot more effort and energy into looking at what our prices are versus market price, the quality of the house that we're renting, also the quality of the resident and stuff like that. People who are difficult, we're not going to be as concerned if they move out. But we're trying to push them harder than we normally would, but we're trying to get to that close to market level over the course of a couple of years, and not right away. And know we're going to be under market for a little while, and okay with that.
Yeah. Of course, regardless of what you're charging for rent, you want the right person in your property, and doing that requires good screening. So if you want to learn how to do that right and have the right person in your property, then please check out this video here. And while you're at it, subscribe to the channel, like all the rest of the
Subscribe, and then watch the video, and then give a thumbs up, and then do all the cool stuff, because you're cool people.
Appreciate it.